Tonight. Good evening, good evening. How's everyone doing tonight?
Good,
Great.
thank you. Wonderful.
Awesome, awesome, awesome. Thank you so much for joining us tonight. This is our financial team, and we are all about financial wealth, building our communities, and helping families grow their legacies one brick at a time. We thank you for joining us tonight. We have a great presentation lined up for everyone this evening. And I just want to introduce some of our guests that are on tonight. If this is your first time with us, please raise your hand. Okay, I had a hand up. Is this Kara Buckley?
Yes. Hi, how are you doing?
We are good. And yourself tonight?
I can't complain at all. It's a beautiful day.
Okay, if you don't, what we're going to do is just have you just introduce yourself and give a quick pitch on your business, really quick, okay?
Okay. Hello, everyone. My name is Kiara Buckley, and I'm a notary public in the Los Angeles area. I do mobile notary, bookkeeping, and taxes, and I'm also an ultrasound instructor. So if you ever
Okay.
need any notary services, please don't feel free to give me a call. Thank you.
Very good. Thank you so much. We appreciate that. Anyone else here for the first time tonight? I see Arthur there. Well, we're going to go ahead and get started. We thank you for joining the LA South Chamber of Commerce. This is a webinar that we do actually twice a month. We truly believe in empowering our communities with financial wealth. Financial literacy is very important, and we're just trying to reach out and make sure that our community is aware of all the opportunities and the resources available to them. My name is Opa J. Price. I am a board member with the LA South Chamber of Commerce. I am also an insurance broker with Insurance Solution Services. So with that being said, we're going to go ahead and get started. Our first speaker tonight, I want to introduce her. Her name is Vernell Taylor, and she is with Union Bank. Vernell is a Union Bank, a VIP manager, VIP regional manager. She works a lot with our community outreach with the bank as well in most of our communities. And she has a wealth of knowledge, you know, just being with Union Bank and knowing that she's been there for so many years. Vernell knows exactly what she's talking about. So without further ado, I would like to introduce her. She will be speaking tonight about tracking your money. And so Vernell, you have the floor.
Thank you, Opa. Thank you very much. Yes, as Opa said, financial education is really important. And we need to have the understanding of where our money is going, how we spending our money, and who's spending the money. And, you know, having a view of where the money is going again. So I'm going to share my screen. I have a couple of slides. I'm going to talk about the importance of tracking your money. So let me go ahead and share my screen. Get that started. Bear with me. All righty. Okay. All righty. Can everybody see this PowerPoint? Want to make sure it's visible and we can get started. Okay. As you see on the title, it says spending and saving. Well, we do spend our money, of course. And while we're spending, we need to track our money, which is really important. As you see on the PowerPoint, we have some coin money there. We have dollar money. So a lot of things are done manually. Things are done digital. However, regardless, we need to track our money. So do you track your money? And we hope you do track your money. Is very important. And why should you track your money? And what's some of the ways to track your money? So before I go into the next slide, some of the main reasons you should track your expenses is to identify and eliminate the wasteful spending habits in your financial life. You know, we waste time, we waste money. We want to avoid that by, again, tracking your money. That's going to be the key word, tracking your money. So consistently tracking your expenses will help you maintain and control your finances and promote better financial habits like saving and investing. I'm going to go move to the next slide. Let's see if it, okay. Give me a second. Okay, so I mentioned the main reason you should track your expenses, identify and eliminate wasteful spending habits in your life, in your financial life. When you track your spending, you know where your money is going. And you ensure that you spend your money wisely. Tracking your expenditures also allows you to understand and you're in debt, understand why you're in debt and how you got there. So when your money is spent and maybe you are in debt and you don't know what happened, well, if you utilize the tools of tracking, you'll probably figure out what happened if you track your money, why you're in debt, or maybe why you're not in debt. Again, tracking your money is very important. This would then help you to design and get a clear picture and a strategy of getting out of debt. All righty, I'm going to the next slide. And there's 5 steps of tracking your money. And one here, check your account statements. That's very important. That means that when you say check your account statements, you need to have a bank account. So pinpoint your money habits when you're checking your bank statements. You're pinpointing your money habits by taking inventory of all your accounts, including your checking account and all your credit cards you have. Looking at your accounts will help you identify where you're spending. So when we utilize paper statements or online banking or mobile banking, we can be able to track our money and see where it's going. 2, you want to categorize your expenses. Start grouping your expenses. Some credit cards automatically have a category of your purchases, like department stores or automobile. You can find these on your credit card statement. It gives you pretty much examples. I noticed that looking at my credit card statement, it gives sections of each spending category that you have. If you went to a hotel or if you purchase things at the drugstores. So that's another way where it's categorized of understanding where your money went. So you can find these impulse buys, like you go to Target and you know why they're costing you a lot. You maybe realize that you're paying a little bit too much, or you have that visibility of your costs. Or maybe you have reoccurring subscription services. Do you really need those subscription services, like subscribing to magazines or whatever the case may be? Maybe it's versus special channels. So you can do without. So by tracking, you have an understanding how much money went out and how much is going in. Your spending will consist of both fixed expenses and variable expenses. So fixed expenses are less likely to change from month to month. And for instance, for your mortgage, rent, utilities, insurance, and other debts, those pretty much will stay the same. And you will have room to adjust your variable expenses like food, clothing, travel. So by tracking, you get a visibility of where that money is going. Using a budget or expense tracking app. Using the app, you know, technology is definitely available to all and all ages. So take advantage of utilizing different tracking apps you can utilize. Oh, I went to the next 2. I'm sorry, you guys. Let me see if it's going to go backwards. Okay, so yeah, using your budget expense or track app helps out a lot. Some of, for reference, there's mint.com you can utilize, money.cen.com. Practicalmoneyskills.com is another app. These apps could help you manage a budget and see, how you could track your money, utilize the example budget sheets, or the actual, it could be a mobile or online app you can utilize to input all your expenses and you can keep track. There's also a kid one where they have www.themint.org. You can utilize this, teach your kids how to spend money, when they're spending money, where that money is going. And there's another one called pbskids.org/It's My Life. So those are for an examples of some apps that you can utilize, have an understanding how to spend your money to allocate a certain amount of income each month, depending on what you're trying to spend or what you're spending or what you're paying for. Explore your expense trackers on number 4. And that means like there's spreadsheets, or there are other valuable money tracking tools that you can find, a variety of free budget templates online, as I mentioned, and NerdWallet is also a good one that also offers online budget worksheets. Or you can have a more complex financial, if you have a more complex financial portfolio, such as if you have a business, you can probably buy a software called Quicken, which lets you import your bank's transactions and monitor your investments. The last one, identifying room for change. So as you track and you're being ready to make adjustments, it's worth your time to keep this in your monthly expenses, because what you uncover tracking expenses can be very valuable, and finding out what's really costing you and what is not as bad as you thought, as what is not really costing you and what is not as bad as you think. So example, you can, by tracking your money, you can lower your business fixed expenses in your life, like for instance, your housing, vehicles, or utilities, because you can, follow up if you had to refi, or if you had to call the your bank where you borrow the money, you have your loan for your vehicle, and maybe you want to get the interest rate lower or refinance as well. Or maybe the utility bills and make up arrangements to say, hey, this is not working for me. So those are some of the tips that you can use for, having that extra room for change. Next slide. Tracking tools and resources is also, these are some of the things you can utilize, telephone banking, if you have a bank account, tracking your money. One way to track your money is by opening a checking account or a savings account, or a credit at a credit union. And some of the benefits include keeping your money safe, tracking your spending. You can earn interest by establishing your account, using the tools and resources that are available to you. It's also important through a regular bank or a credit union that they have available. There are the resources. They partner with other nonprofits, for instance, the Chamber. There's resources that you can utilize to have different financial education opportunities, debt management, or different counseling. So as on the picture, these are some of the tools you can utilize for mobile app, online banking. And yes, we can go back to the manual register. If your system is down, you can utilize a register to track your money. We always want to make sure we understand the manual process. With a pencil and a paper, tracking your money is very important. Having understanding what goes in and what's going out and what it is. This is another example of a personal monthly budget. This personal monthly budget assists you how you're going to manage your money, as far as your housing, entertainment, loans, transportation, food. This is just an example how you can create that personal monthly budget that helps out a lot as well. And one way to track your money is, again, I mentioned that, you're tracking your account or using this personal budget sheet is also very important as well. So this is just a view as another resource that you can utilize. If you haven't seen one, you can always download one online or maybe create your own on Excel. And as I mentioned, Excel, there's spreadsheets for business expenses. This is just one of the basic Excel sheet for your business expenses where you can be able to track your money, tracking to define a variety of ways in different categories to utilize for your business. Because we have a business, we want to make sure we keep our personal and business away. So that's very important. Basic business expenses spreadsheet here is not all expenses. Tracking spreadsheets are complex. This is just a basic. There are various ones that may have a dozen of columns and different categories. But again, sometimes you can have the simple list on your expenses as you has here. And this is an example of a basic expense spreadsheet. A few takeaways: tracking your expenses can reveal spending issues. Tracking your spending can also help identify serious problems in how you manage your money. A budget forces you to map out your goals, save you money, keep track of your progress, and make your dreams a reality. That's it of my portion of tracking your money. My name, Vernell Taylor, my title, Regional Manager, Community Outreach Specialist for our student-run branch at Union Bank. We teach a lot of students how to manage your money, understanding banking, leadership, work ethics. So yes, that's it of my presentation. Thank you very much. If you have any questions, we'll probably have questions at the end, Q&A. Thank you.
Thank you so much, Vernell. That was awesome. A
Yes.
lot of great information. I think tracking your money and looking at your account on a regular basis really does help. The other thing I didn't mention about Vernell also is working with the high schools. Union Bank is in a lot of your high schools out there and teaching the students financial literacy, how to become bankers if they choose to, and how to open savings accounts, how to open checking accounts. And I think that's awesome. I am really pleased because I know one of the first ones they did was at Crenshaw High School, which is my alumni, and I am pleased about that. They're doing an awesome job. So thank you, Vernell, once again. Anyone have any questions at this point? Be sure to put them in the chat box so we can answer those. Towards the end, we will have an open discussion from each one of our speakers. Thank you so much. Our next speaker is going to be Terry Larry. Now, Terry is our CPA, and she is going to talk about withholdings and also reporting. So without further ado, Terry, you have the floor.
Hi, good evening, everyone. My name is Terry Larry. As Opa said, I've been a CPA for over 30 years. My primary practice area is tax, and that includes tax planning, tax compliance, tax resolution. So today I'm going to speak about, or I'm going to let the IRS speak about withholding. I'm going to show you a couple of videos, and then you might have some questions. And I'm going to do a demonstration, just a quick demonstration for you about withholding. I know some of you are employees, and then some of you are independent contractors. You may own corporations or have a sole proprietorship. Well, depending on your status, you have to pay your taxes in a different manner. So first, I'm going to go over estimated taxes, and this applies to independent contractors, corporations, and anyone who really is not an employee. So can you see the screen pay as you go?
Yes, we can see it. I can see it.
Okay, so I'm going to start it right now. This, can you hear it?
No,
Not
we
yet.
can't hear it, not yet. You have to hit on the share button to share your
I'm
sound.
gonna make you another hot dog. Is that fly still in here? I think it's because we got fruit and stuff and it smell the fruit and it wants to come because of the smell.
Somebody needs to mute.
Which is could be a good smell, but they like sweet stuff. Flies like certain.
Could I get someone to mute themselves at, okay. We can't hear the sound, Terry.
Muted, Terry.
Terry, stop sharing your screen.
Harry?
Stop sharing your screen. Okay, Terry, go ahead and push the share your screen button, and then at the bottom left side, you'll see share sound. Make sure you click that button that says share sound, and you're on mute, Terry.
Terry's muted. I don't think she's
Okay,
aware of it.
I'm muted now. So we'll go back to the estimated payment video.
Income taxes are a pay-as-you-go system.
Can you
That
hear it
means
now?
you pay your
We can hear it, but we
taxes
can't
as you
see
earn
it.
income during the year.
Okay,
Either your employer withholds taxes from your pay, or you pay quarterly estimated taxes on your own.
So
If
Terry,
have
you
income
have
that's
your
not subject to
desktop
withholding,
on the
you may
screen.
need to
You
make
just need
quarterly
to
payments.
find where that
This includes
Yeah,
income
yeah,
such as self-employment
YouTube
income, interest,
picture is.
dividends,
We can't see you.
prizes, and rental income.
So if
Okay.
you, are
It
you
may
sharing
also
screen now? You
include
may want to
income earned
stop and
from
then
gig
start
work
again.
or other
Okay, there you go.
activities where you are
There you
not
go.
an employee.
okay, I'm gonna
such as
start it
money
again.
you earn.
So
Income
hopefully
taxes are
this
a
time you see
pay-as-you-go
both.
system.
Yeah, I
That
think we're
means
good.
you pay your taxes as you earn income during the year.
Can you bring up your volume?
Either your employer withholds taxes from your pay, or you pay quarterly estimated taxes on your own. If you have income that's not subject to withholding,
It's to the
you
left.
may need to make quarterly payments.
At the bottom,
This includes
see where the
income
little
such
pig
as
is? Your
self-employment
volume
income,
tab is
interest,
at the bottom.
dividends, prizes, and rental income. It may also
I'm
include
sorry.
income earned from gig work or other
Go to the
activities
left,
where you are not an
all the way
employee,
over.
such as money you earn as
Oh.
a for-hire driver.
See where
delivery
there you
person,
go.
That's my
provider.
right.
Generally,
Oh,
this
okay, I'm
income
sorry,
is
the
taxable
opposite.
even if you don't receive
Okay,
an income
so there
statement
you go,
form
drag
such as a
that.
W-2 or 1099. So make sure you keep track of how much
I
you
think
earn.
this is as loud as I'm
Go
gonna
to
get.
irs.gov/payments to learn more about payment options. You can pay online, by phone, or with the IRS To Go mobile app. When you electronically file your tax return, you can schedule your estimated tax payments with an electronic funds withdrawal from your bank account. Other free electronic payment options include pay online from your bank account using IRS Direct Pay and the Electronic Federal Tax Payment System, or EFTPS. You must register to use this one. You can also use a debit, credit card, or digital wallet option, or pay with cash at one of over 26,000 participating retail stores nationwide. But know that the provider, not the IRS, charges fees for these choices. You may also choose to pay estimated tax payments in 4 equal quarterly payments using Form 1040-ES and mailing it with a check to the IRS. Here's the bottom line. If you expect to owe at least $1,000 in taxes, you may need to make estimated tax payments. And if you pay too little tax during the year, you may have to pay a penalty. So, if you have taxable income from any payer that doesn't withhold tax for you, check to see if you need to make estimated tax payments. Go to irs.gov/pay-as-you-go to learn if you need to set up quarterly estimated tax payments, or to see if you should increase your withholding if you have an employer.
Okay, I'm just going to go through a little bit of what that was about. If you need to make an estimated tax payment, usually you're not an employee. You're usually getting payments from vendors. You're probably self-employed. You may have a corporation or anything like that. If you expect to owe more than 1,000, you might want to look into making an estimated tax payment. And if you can't make it all at once, the IRS allows you to make quarterly estimated tax payments. So whichever way you can afford it, or just put it in your budget, as Brunel was speaking about earlier, because you want to avoid any kind of underpayment of tax penalty. And nowadays, these penalties are getting outrageous. So pay as you go. There's many methods you can use to estimate your income, but by the end of the year, you should pay in at least 90% of your tax to avoid penalties. And if you have an accountant, they probably can go over the methods used to estimate income, expenses, and then ultimately your tax liability. Now, I'm going to go to a tax withholding estimator. This is also on the IRS website. And this one, I don't know if any of you have received huge refunds of taxes or you have huge underpayment of taxes. You don't want to have a huge refund of taxes. And I know a lot of people think that, well, that's my savings for the year, but that really is not a saving. You're giving the government free money. You're not getting any interest or anything on that money. So again, you need to estimate your taxes so that you don't have a huge refund or a huge liability at the end of the year. And the IRS has this estimated tax withholding estimator so that you can go in and put in your information and make the estimated tax. So if I go into this, it goes through everything that you may need. So it'll go through a variety of questions. So like this first one, what filing status will you use for your tax return? And I'll just put single. Do you have a job that regularly withholds federal income taxes from your paychecks? And I'll just put yes. And then it goes through other questions like, I will be 65 years older or older, because there are special credits for that. If you're blind, you may not be able to claim all of your deductions if someone else claims you on their return. Like, I don't know if you have a child in college who is earning money and the parent is still claiming the child, there may or may not be able to get the special deductions that are allowed. So it goes on and on. You could describe your income. We'll say it's a hourly job. I had this job all year. And then it asks about other types of income you may have, like investment income, which is income, interest income, dividend income, scholarships or grants, unemployment insurance. Now, for 1 year, I think during the coronavirus pandemic, you did not have to pay taxes on that unemployment insurance that you received. But that's over with now, so you would have to pay taxes on your unemployment. And so you should include that in your estimated withholding form. So this goes on and gets pretty detailed about how often you're paid. And you could put it in pretty much any information you want. So this goes pretty thoroughly through what you need to do. So if your most recent pay period was like today, you could put that in. And you could say, if you're paid like regularly, you have a full-time job and you get regular paychecks, you could say this paycheck is a good representation of how much I've earned on average each pay period. Sometimes you may have work stoppages, if that's a word. So your paycheck may vary from week to week. Maybe 1 week you earn a lot of overpayment, the next week you do no extra work. So you could select either one of these and then go on and enter the amount for all of this. It goes through and eventually you get to a spot where it asks you to put in your expenses. And the expense category is really important because I know many of us who have homes, we're paying maybe a lot in interest, especially if you recently purchased your home, you may have a lot of interest expense. So you wanna put that into this estimator. You may pay payroll taxes. The limit would be $10,000 because of federal law. So you can only put down $10,000 of state taxes that you paid, like real estate taxes, state income taxes. All of those state taxes are limited to $10,000. So eventually you go through a calculation and it gives you the amount that you should have withheld on your paycheck. And in order to report that, you would have to give your employer a W-4. And I would advise that you go through it again now, because the W-4 forms have changed for federal tax purposes. Back in the old days, you could say, well, I want 10 exemptions or have 10 withholding exemptions on for my paycheck. Now you can't do that anymore. You have to go actually through this whole process and estimate your expenses and your income. So at the end of the day, you may come up with, like, I need an additional amount withheld, or back out $20,000 of my income because I have expenses to cover that, and I don't need to have extra withholding on that. So this is just a brief thing on estimating your taxes. Make sure you pay your taxes. You don't want to, like I said, have penalties and interest. Those probably will not be in your budget, and it's a waste of money. When you can easily figure out your withholding or get close enough to it, you can always estimate do another calculation and say that I'm really not underpaid according to the four quarter scenario, because maybe you made 1,000 one quarter, 2,000 the next, 3, and 4,000. So that would be taken into consideration, and you could avoid an underpayment penalty and interest. Again, those underpayment penalties and interest are just a waste of your money. So be careful when you're doing your estimated tax payments and your withholding from an employer. Thanks. That's it for me. And so now I'm going to turn you over to Lorene McLeod, and she's going to go over some of the things you might see on your pay statement, including, the federal tax withheld, Social Security, things like that. Lorene?
Thank you so much, Terry. She is about to start. So let's introduce Lorene McLeod.
Thanks, guys. Good evening. My name is Lorene McLeod, and I'm an independent life agent. I provide insurance services, including disability insurance, life insurance, long-term care, and final expense. I'm also a proud member of the Los Angeles South Chamber of Commerce and a member of the financial education team. Today, I'll be talking about understanding your paycheck. And Dexter McLeod will be sharing the slides for me. So next slide, Dexter. So let's get started. I'm going to start off by sharing a short story. A few years ago, my daughter, who was a college sophomore at the time, got her first real job on campus. She was super excited. She told me her job paid $10 an hour, and she would be working no more than 20 hours a week. 3 weeks later, she got her first paycheck and called me on the phone. She wanted me to share in the experience of receiving her first official check. She tore open the envelope, and I heard her mumbling to herself, "No, this can't be right. This isn't correct. I worked 40 hours at $10 per hour. That's $400. My check is $261.50. Then I heard her say indignantly, "Mom, who is this FICA that's taking all my money?" Well, that day, my daughter learned an important lesson about federal income tax and FICA withholdings. Now, it's likely that some of you may have had a similar experience and may still be unclear about where your money is going. Hence my topic, understanding your paycheck. Next slide. We all look forward to payday, but do you know how to read your paycheck? What are deductions for? What are withholdings that Terry was talking about? And what do we mean by taxable earnings and net pay? We'll start going through your paycheck by describing the difference between gross pay and net pay. So next slide. Thanks, Dexter. Okay, so as you can see on the slide, there's an explanation of gross pay and net pay. Now, gross pay is the total amount of earned income before withholdings for taxes and benefits. Net pay is the bottom line. It's your take-home pay, and it's what, unfortunately, most people pay attention to. And in the case of my daughter, the net pay was at $261.50 that she saw. Now, how many of you here today know your gross pay? Don't worry, I won't ask you to share it. Just by a show of hands, how many of you know what your gross pay is? Well, while it's important to know your net pay as that drives your budget, as Vernell stated, it's also important to know where your taxable earnings are going. So let's drill down into withholdings and deductions. Next slide. Okay, so what you're looking at here is an example of an employee paycheck and a payroll check stub. So let's take a look at the paycheck. This, I'm sure that everyone is familiar with. It's basically a check. It has the person that the check is paid to. It has the amount, that's your take-home pay, and it usually lists in the memo section the pay period. And typically, a lot of people get paid every 2 weeks or bi-monthly. Now, right beneath that is the paycheck stub. This may be less familiar or perhaps more likely, or maybe what's more likely overlooked. So I want you to take a look at that pay stub. Dex, is that as big as it can get? Yeah. Okay. Yeah. Okay, that's perfect. Thank you. All right. So as you notice, the pay stub shows the column that says gross earnings, and it lists the total amount that you've worked for that pay period. And for those folks on the call that are employees, it basically is the sum of the number of hours worked times your pay rate. So in this particular case, it's $1,680. But let's take a look at the deductions. The deductions, as it states, is the money that is subtracted from your current earnings to give you your net pay. And they include federal income tax, Social Security or FICA, Medicare, state income tax, and state disability insurance. Now, in this particular example, the total deductions were approximately $276, leaving you with the net pay of $1,403, right? So this is basically what those deductions are. Now, next slide, please. Now, I think now that you've learned what those deductions are, the question is, do you know what your tax bracket is? All right, so let's take a look at that. Now, this particular chart shows your federal taxable income bracket and rates for single filers, married, joint filers, and the head of household filers. Now, I'm going to have us take a look at a single filer, because I know there are folks on this call who are single filers. And let's take a look at an employee who has taxable income between $9,000 and $40,525. So for single filers, if you take a look to the left of the chart, you'll see a tax rate of 12%. And basically what that's telling you is that as far as the taxes that the federal taxes that you're expected to pay, 12% of your gross earnings will be allocated to federal, would be paid to the IRS. Now, just take a quick look for those of you who are married, like Opa and Dexter, or filing as head of household. You can take a look at the chart and you can see, say for somebody who's a head of household, earning between 86,000 and 164,000, their tax rate will be 24%. So this is what is known as a progressive tax rate. That's what oftentimes you hear folks talking about, a progressive tax rate. That's basically what it shows there. So the bottom line is that the more gross income you earn, the higher your taxes. Next slide. Now let's take a look at state taxes. And folks are saying, oh no, I've just been told I pay federal taxes, state taxes too? Well, yeah. Now, state income taxes vary greatly from state to state. For example, in Arizona and Texas, there is 0 state income tax. And I think that Nevada as well. I'm not sure, perhaps our resident CPA could nod and tell me if I'm right.
You're right about Nevada.
Okay, good. However, for those of us who live in California, the state income tax rate can range from 1% to 12.3%. Next slide. Now, what are some additional other withholdings are Social Security and Medicare. These are additional deductions from that gross income that we're looking at the beginning of the presentation. Now, what do these numbers represent? 6.2% of gross income up to 127,000 is withheld for Social Security. Yeah, you heard me correctly. 6.2% of every paycheck up to 127,000 is withheld for Social Security. Now, why? Well, because the Social Security Fund provides benefits to current Social Security recipients. Everybody on this call will know someone who is receiving Social Security benefits, whether it's your grandparent, your parent. But one thing that Social Security does not guarantee is that you will receive benefits. And that's for another presentation. But the main thing for you is to know that 6.2% of your gross income is allocated or will be deducted for Social Security. Now, the next area is Medicare. Medicare, slide right back up, Dexter, just move back to the previous screen. Medicare, right. Now, Medicare withholds 1.45% of gross income. 1.45% of your gross income is withheld for Medicare. Now, how many of you believe that Medicare will cover all of your medical expenses once you're eligible? Anyone wants to kind of believe, anyone believes that? No, but
Won't happen.
no, but at the end of the day, Medicare provides a very, very important service. Now, a quick note on FICA, which is my daughter's pet peeve. FICA taxes and benefits consist of two parts: Social Security or old age survivors and disability insurance, and hospital insurance for senior citizens and the disabled, known as Medicare. So basically, daughter of mine, FICA, the reason that they deduct FICA is for very good reason. It provides Social Security, which hopefully lots of people here will eventually get when they retire or at age 65, and Medicare, which is an excellent, excellent medical program. Next slide. So these are all deductions from that gross income. Okay, the next, another potential withholding on your paycheck are benefits. Now, I just need to say this, not all employers offer benefits, because you could be working at a company that offers 0 benefits. Of course, there'll be no withholdings, but I'm hoping that for those of you who are here, you are benefited. And so these would be additional withholdings from your gross income. And these benefits include medical, dental, and life insurance, as well as your 401k. Now, understand that these are pre-tax deductions. That means that the withholdings are taken out before federal and state taxes are assessed. Now, a quick note about life insurance. In most cases, the life insurance benefit you get through your employer is term insurance and may not be transferable if you leave your employer. And I don't know how often I run across clients when we talk about insurance and the importance of having a term insurance plan or a life insurance or a permanent life insurance plan. They say to me, well, I've got insurance through my employer. But the question that I'm paying into, but one of the things that they were never aware of is that if they were to leave that employer, that term policy may not be transferable, and in most cases isn't. Or if you retire or resign from that company, there goes your insurance policy that you've paid years into. So that's something to keep in mind. So I would suggest getting your own personal life insurance policy to ensure you continue to protect yourself and your family in case you leave your employer. Now I wanted to say a couple of words about the 401k, and a 401k is essentially an employer retirement plan. It's a great plan, and the key thing to remember is that some employers offer a matching policy, a matching policy, or have a matching policy, and so this is something that you need to inquire about, because they may not just tell you that up front. You have to ask them, do you offer a matching policy? And if they say yes, they do, then be sure that you're maximizing your match. Because if you don't, you're leaving a lot of money on the table. And I remember when I worked at the bank, I would always tell my associates, that's free money. You're saving this much money on your own. The company is taking that money from your paycheck and putting it into your retirement plan, but take advantage of the matching policy. It's great. And also most employers match up to 5%. So that's a very substantial contribution by the employer. Next slide. And this is the big question that we started off with. So what's your net pay? Now, everyone here, if you have been really paying attention, should have a pretty good idea as to what your bottom line is and how you got there. It's basically this. It's your gross pay minus federal taxes, minus state taxes, minus your Social Security tax and Medicare, FICA, minus your employer's benefits or the cost of the employer's benefits, and voila, that's your net pay. Well, folks, that's it. Thank you very much. Thank you for your attention. Next to the final slide, please. Final slide. Oh, okay. So thank you very much. The next slide just says thank you. So I want to thank you for your attention, and I truly hope that you have learned something here today. Thanks.
Thank you. Thank you so much, Lorraine. Awesome presentation. Let's give all of these ladies a hand, okay? Awesome, great information. I hope we were able to help someone tonight with some information from each one of these ladies. Before we go, what I'd like to know, is there anyone that have any questions? If so, make sure you raise your hand or we can put them in the chat. Okay, and while we're doing that, we have a few other people that we did not have a chance to introduce at the beginning of our webinar. So I'm going to call on just a few of you before we close out, okay? Serena, what I'd like for you to do is just introduce yourself really quickly and just give us a quick info about your business that you own or where you work.
Hi, my name is Serena. I'm Lorene McLeod's daughter. So that's what she was talking about in the story about the paycheck, because I was very, very, very confused.
Oh,
and
you're
it
that
still,
ouch, huh?
yeah, it still hurts. Years later, it still hurts seeing the deductions. But I'm just here to gather information. At some point, I do plan on opening my own business. A few business and investment ideas. So as of right now, I'm just trying to be a sponge and gather as much information as I can. I appreciated all the presentations. And I guess my only question would be for Miss Terry, if she wouldn't mind putting the links to those YouTube videos in like the comments, I would greatly appreciate, so I can go over revising them, because I also don't always understand taxes, and especially when you own your own business, taxes do get a little confusing. So if she could maybe provide the links to that somewhere, I'd greatly appreciate it. Thank you.
Thank you so
Great,
much. We'll
I
make sure
will.
that each one of them, make sure their information is there. Thank you so much for joining us tonight.
I think Terry was going to say something.
No, I was just going to put the links. For all of these schedules and YouTube presentations, you could go to irs.gov and make sure it's irs.gov, because there are some people who are trying to trick you into thinking that irs.com is the IRS website. And nowadays, all of this cheating and trying to trick people into giving money to other people it's rampant. So so if you go to the first page of irs.gov, see if I could share that screen right now. And then for the tax, this is the first page of irs.gov. And this is where you will, where you can go to check your withholding. Then there's a search bar, and you could put in estimated tax, and you'll get this publication about how you should do estimated tax for individuals, estimated tax for corporations. If you have an estate or trust, this IRS website, even though we don't typically like to have anything with the anything to do with the IRS, but the website is very helpful. So the first place I would start is irs.gov. And so I put that in the chat, and then from there you could go, whatever questions you may have, you can just put it in the search bar.
Good information. Thank you, Terry. I have a question. This is good information, and I really applaud Serena raising her hand, asking those questions about, the tax deductions from your payroll. Very important. And if you're starting a business, you definitely want to know that important information. The question for Lorraine. Lorraine, you mentioned some of the things about the deductions from your payroll check, and some folks don't understand. Did you explain, or could you explain the VBDI?
The what?
The VBDI.
The BBDI.
V is
Let me
in
go-
victory, B is in boy, D is in dog, I is in ice cream.
VDBI.
Mhm.
I would say, because I was doing some research on that, and the only thing that sounds similar that I could suggest, I would think that it has something to do with your disability insurance benefits, right? I am not
Okay.
sure the V, but I know the SDI is your senior disability insurance benefits. Terry, do you know what that would be specifically? Because on the payroll check I looked at, that wasn't there, and I've seen it as OASDI. I'm more familiar with that
Yeah.
format.
I haven't seen, did you say
VD.
VB?
Yeah.
I
She
know
said
the B is
VB.
voluntary, and I don't remember the B, and disability insurance. I
Insurance.
forget what
Okay.
the B is. But
Yeah.
Instead of,
voluntary,
I don't know the V.
okay, instead of paying into the state disability system, a lot of companies now are privatizing these
Mhm.
disability systems just to equal the state amount. So they don't have the extra burden of having to pay into the state. And
Mhm.
so it's probably just a private disability plan by a company.
Right. Well, that
okay,
makes perfect sense, because you're looking at maybe a company that is providing that is providing their own insurance or some kind of voluntary insurance plan. The V is probably for voluntary for now. Yeah.
Mhm.
Yeah. But typically we see the state disability insurance, which I'm familiar with.
Yeah, when I was starting out at Hughes Electronics, which I don't think it exists anymore, but they were one of the first companies to adopt like a private plan like this. And so if you are paying into a system, whether it's private or into a state system, you can include that payment if you itemize your deductions, you can include that amount in your state deductions, but you have to remember you're limited to 10,000 total. So sometimes you'll be able to deduct it and sometimes you won't, depending on what other kind of state taxes you're paying, maybe real estate, income tax, and this one. If you're under 10,000, you can, or equal to 10,000, you can deduct it on your, as an itemized deduction.
Thank you.
You guys
there
so much. We need to really check that. It's called, is it VBDI or is it VBI?
It's VBDI.
BBBI. Okay.
V is
okay.
in victory, B is in boy, D is in doll, I is in ice cream.
Oh,
VBDI.
VBDI. Okay.
Which
okay.
voluntary disability insurance, we wasn't sure what the B is for.
Yes. that we need to get clarity on. I thought you were saying BVI, so I did have, explanation for that. So, but anyway, thank you guys so much. Any other questions? Any more information or questions in the chat? I don't believe so. I want to thank everyone that did attend tonight. We had a couple of people that left before we could introduce them. But Vernell, Terry, Lorraine, you guys did an awesome job. Okay. Thank you so much. And that was great. We stay tuned for our next meeting coming up, which will be June 30th. And at that time, we will be talking about credit, your credit bureaus, and we will also be talking about retirement. My desired income, my desired retirement income versus the reality of what the income will be. So it will be Calvin, Tyler Miller, and myself. So that will be June 30th at 6 o'clock. So I look forward to us tuning in at that time as well. Thank you guys once again. Serena, is that correct? Thank you for attending. And I'm sure you picked up a lot of information. You're young, you have time on your side. So that's what you want to remember. I'm young and I have plenty of time to get it together. Okay.
And my nephew KJ is also here, and he's also young. He's in his 20s. So I think
Okay,
this has been great.
Awesome,
you.
awesome. And you got a great role model there. Okay.
I do.
So-
Thank you very much.
All right. Well, thank you, Vernell. Thank you, Terry. You guys were awesome, and we will see you next time. Thank you for tuning in, everyone.
Thank
Have
you,
a great
Opa. Thank
Awesome.
you,
Thanks, Opa.
Lorraine. Thank you,
Thank-
Terry.
Thanks, Dexter.